Hi, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch this weekly stock market update for the week ending Friday, March 1st, 2019. It's a beautiful Colorado day, and I thought I would take a walk instead of sitting in my office and record the video outside. I'm walking my dog Lizzie, who's here with me right now. I'll introduce you to her while she yawns. Anyway, Lizzie is a golden retriever and Siberian husky mix called a Goberian. She's 6 years old, but she acts like she's about 6 months old. She's still quite the puppy. But getting back to the economic and market commentary, I am going to talk to you about the current slowdown in economic data that we are seeing right now, and I'm also going to show you some charts in a minute of the Dow Jones Industrial Average, the S&P 500, and the Nasdaq. And before I do, please subscribe to this YouTube channel if you have the ability to do that. You may be watching this on social media instead. If that is the case, like or follow Christensen Wealth Management on your social media platform. Now, I want to talk to you a little bit about the economic slowdown. We currently have a very interesting situation where 2019 forward earnings per share estimates for the S&P 500 companies is in decline, and those companies have already reduced forward earnings estimates for this year by 50%. Not only that, but we have just been given extremely sluggish news for the new home starts for the month of December. They came in extremely weak, and that is also an economic indicator of a potential slowdown in the economy if people are building houses much slower. We also have 7 million people who are more than 90 days delinquent on their auto loans in this country, which is a record high. We have student loan delinquencies at record highs, and we have all kinds of other economic data, which I will get into as well in a moment. But my advice for the rest of February and for March is use extreme caution, and if you haven't already reduced the quantity of stocks in your accounts, now would be a great time to do that after this rip-roaring post-Christmas rally that we've had in the U.S. stock market. The S&P 500 has come to the same level as its mid-October high, its high of November, and its high of December, and it's having tremendous difficulty getting through that line of resistance. So I would put some hay in the barn and be thankful that you were part of this post-Christmas rally, and be prepared for an economic and stock market slowdown in the weeks and months ahead. We are so incredibly overvalued in this current stock market when you use the information provided by Robert Shiller's cyclically adjusted PE ratio and John Hussman's profit margin adjusted price to earnings ratio. And I think it is important that not be ignored. Without further delay, I'll go ahead and jump into the charts of the Dow, S&P, and Nasdaq, beginning with that Dow Jones Industrial Average. Let's take a look. Looking at this chart of the Dow Jones Industrial Average since January 1st, 2018, you can see that we are currently in this very significant rally since Christmas, as represented by this blue line right here. But you can also see that we may have come to an end, and we have broken this particular trend line. If you connect Christmas with this closing low of February 11th, we have peaked below that line as of the close on February 27th. But let's get a little more detail in here, and I'm going to switch this chart to a candlestick chart so I can see the highs of every single trading day. And the thing that concerns me most is this particular point right here, which I will illustrate by this arrow. That blue arrow is pointing to the daily high of December 3rd, 2018, and we rallied up there and broke it as of February 22nd this month, got to a little higher high on February 25th, and then we dropped back on the 26th and 27th of February. So as of the 27th, we are currently about 5 points below this December 3rd low, which means that we have, for the moment, failed on price, meaning we got above that December 3rd high and now we pulled back below it, but we have also failed on volume. And what I mean by that is I went back and looked at the volume on this day, and that was on December 3rd. We had 388.4 million shares traded in the Dow that day. We broke that on February 22nd with only 279 million shares, which is a little over a 27% fewer number of shares traded. That is a significantly less amount of enthusiasm at that same price point. So we broke above it, but we have since failed to hold that high, and we had lighter volume. So I am concerned that we are done with the Christmas rally. But if I zoom in a little bit here, let me zoom into like the last 6 months or so, as of right there, then I'm going to draw a line from the low of the day after Christmas, December 26th. I'm going to draw that up. Excuse the little arrowhead there. And I'm going to draw that up just like that so that you can see the different points on this particular line. I'll draw in some circles here real quick. With those circles, you can see that we began here on December 26th. We created the second point of the trend line on February 8th. The next point of the trend line touched it also on February 11th. We touched it again on February 14th. We broke it on February 26th, but closed back above it on that day. And then as of February 27th, that trend line since Christmas is broken. And we failed to hold the December 3rd high. So some caution here on the Dow Jones Industrial Average, because we may be headed lower, but we need to take it one day at a time, because it's not exactly in free fall at the moment. It's taking its sweet time, but we have a broken trend line and a failure to hold that high. So we'll see where we go over the next several days, but right now use caution on the Dow Jones Industrial Average, because we are getting very tired on this stock market after a 2-month rally since Christmas. Here is the chart of the S&P 500 stock index, and you can see, just like the Dow, we've had this nice rally right here since Christmas. However, we may have broken that trend over the last few days, because if I draw this in just like that, you can see we had 1 touch, 2, 3, 4, and then we broke it, touched it one more time, and then now we've wandered outside the line. So that could be a concern. But let's change this chart to a candlestick chart so I can see each day that we're dealing with here. We have, first of all, we have this high right here, which is October 17th. We have this high right here, which is November 7th. And we have this high right here, which I believe is December 3rd. Yes, it is. So we have those 3 highs right there, and we are right up into that mess as we speak in the S&P at present. And so we're testing those highs. So if I draw in some lines to see kind of where those resistance points are, let's put one right there. And that also coincides with November 8th, but there's also this high right here, which is about right there. So just like the Dow Jones, we rallied up, we got above the December high, but we did not get above the November and October high on the S&P 500 index. And now for the last couple days, we have failed to hold all 3 of these October, November, December highs, and now we're back below all of them. And let me take a quick look at the volume of trading. Having checked the volume numbers, we got above the December 3rd high in the last, this week on February 25th with 2.347 billion shares. And on December 3rd, we made that high with 2.763 billion shares. So we broke that with 15% less volume of trading, which means there were not as many buyers of stock or buyers or sellers as there were on December 3rd. And because of that, one possible reason for the failure on price here over the last few days is because we had that 15% lighter volume and it just didn't have the strength to continue, and so down we come. So let's see what it looks like up close. This is a 6-month chart of that same S&P 500, and if I draw a line from December 26th at the low and connect it to the low here of February 8th and draw that on up just like that, you can see that we touched it once, and then twice, and then 3 times, 4 times, 5 times, and we broke the line, the trend line on February 26th and continued just slightly lower on February 27th. So that trend line from Christmas on this particular line is broken for the moment. So we need to be careful and just watch and see if a sell-off is coming, because that trend line's broken and we did fail to hold all 3 of these highs from October, November, and December. So caution for the S&P 500 at the moment. Here's the chart of the NASDAQ 100 stock index, and it has broken its high of December 3rd in this big rally we've had since Christmas. Let's go ahead and draw a trend line in there though and represent and see what looks like. Yes, it does in fact look like that trend has been broken as of this week, and we're now slowly rolling just slightly downward, but that trend is broken. Let's switch this chart over to a candlestick chart so I can see those highs of each trading day. We have this high right here, which is December 3rd, and we have this high right here, which is November 7th, and we have this high right here, which is October 17th. So right now we are challenging those 3 highs, but we also have one over here from March 13th of last year at the same price point. That could be a concern, but these points represent resistance for this NASDAQ 100, especially since it is so tired from the Christmas rally. That December 3rd line, well, the blue line I just drew is at the December 3rd high. That will be a resistance area. This blue line is the November 7th area of resistance, and this line up here would be the October 17th line of resistance for the NASDAQ. And we came up this week above this December 3rd high, but on that December 3rd date, we had 722.8 million shares traded, and we got above that with only 628 million shares traded, which was just shy of 100 million shares. That's not insignificant. That's 13% less shares traded, and it could be the reason why we pulled back the last couple days, and now we need to wait and see if this NASDAQ is done going upward, and if it's going to be rejected at this December 3rd resistance point. If I zoom in to the last 6 months, let's take a look at the trend line. Here, if I draw in that trend line starting with December 24th, which was the low of the NASDAQ right there, and I go up and I connect it to the low of January 29th and draw that line up just like that, you can see that we held it until about February 20th, broke it, rallied up, and touched it from underneath one time on February 25th, and now it pulled back. So it looks to me like the December 24th to February rally trend line may be over, and that is something to be concerned with. So we just take it one day at a time and see if this NASDAQ is all done. because we broke the trend and now we're running into resistance with lighter volume. There's all kinds of issues in addition to the fact that we are overbought. Being overbought means that we went up too fast since Christmas, and now the buyers of this particular index are probably getting very tired and looking for a pullback before we can go higher, if in fact it does want to go higher. So a lot of things working against the NASDAQ 100 right now, so just use some caution. Thanks again for watching this video. Please like or subscribe to this YouTube channel or this social media page so I can keep in touch with you through all these different means of communication and keep you informed as we go forward. Thanks again. Have a good day.